Good morning, traders. This is Michael coming to you from GammaEdge on Wednesday, May 21st with our pre-market morning strategy and briefing session. As always here at GammaEdge, we start with our three pillars: sentiment, structure, and trend. Currently looking at our market trend model, which is based on the tick index. You can research that at your favorite investing website, but the quick takeaway of the tick index is buying versus selling of overall market participants. Our key indication of that here is our bolded CT. This is our cumulative tick, again indicating that buyers have been in control for the past few days. And then heading into yesterday, towards the end of the day, we did see some sort of consolidation and then a slight pullback in the overall cumulative tick, indicating that buyers may be a little exhausted and sellers were trying to take control of the overall trend that we've been watching. These moving averages are basically our short-term moving averages that indicate a trend. Obviously, these have been up from lower left to upper right. As we see the bolded CT start crossing below the shortest term moving averages, then we can become a little bit more cautious, possibly rein in our overall positioning and take some profits, as well as just wait for the consolidation to resolve either to the upside or to the downside. Our longer term look is this colored ribbon. The red is above the cyan, indicating that our longer look back period, that buyers are maintaining control of the overall market, and that we continue to put capital to risk within a longer term time frame. I'm heading up to our breadth indicator. This is new highs versus new lows. Obviously the green would be the new highs, the red would be new lows, indicating that more stocks continue to be bought than sold, at least yesterday for the greatest part of the day. The filtered cumulative tick indicator, this is filtered by plus 1,000, minus 1,000 block orders. These are obviously larger institutional players or market participants. We did see it drop below the zero line heading into the afternoon yesterday, indicating we did see a few larger block orders coming through on the sell side versus the buy side, and then our cumulative tick was maintained above zero throughout the day. So we'll continue to watch this. Two scenarios can play out. We could see the bolded CT cross below the moving averages and start heading back down towards the colored ribbon. This would indicate a shorter term pullback within a longer term uptrend in the overall market, or at least some sort of consolidation, or we can resume the uptrend back to the upside, obviously staying above the moving averages, and then indicating that the CT would gain a positive slope and that buyers are taking back control and maintaining control of the overall market. So we'll continue to watch this intraday to help our overall positioning and sentiment of the overall market. Moving on to the SPXA, this is our cruise ship. Longer term expiries is indicated over here. These are larger market participants, including institutions and larger market players. Takeaway here is we are call dominated on the gamma condition. This is indicating that we are in the money and out of the money call dominated above and below spot price, as indicated by the green net delta here, as well as the net delta below the closing price yesterday. We do see some pockets of put dominance starting to open up or show within the overall net delta. Again, nothing to get too worried about within the overall structure at the moment, but we just do take note that we do see some erosion of the in the money calls below us and out of the money call speculation starting to come in. So obviously a significant change would have to occur for the sentiment and structure to kind of change our overall bullish look. But again, just something to keep a watch on. Again, these are longer term expiries and do not exert as much force intraday or for the next few days. But again, it's a 30,000 foot, 40,000 foot view of the overall market of larger players that we like to keep an eye on. Heading into the next slide, this is our SPXP. This is obviously our speedboat, SPXA delta balance. Again, nothing really changing here within the overall noise that we've experienced this week. The right-hand plane out of the money call speculation maintaining above zero. Left-hand plane and delta balance, again, above zero, pegged at 1, just indicates that call speculation is in control, and the institutions are really not changing method positioning, as well as the projected on out in time with the news and noise we've experienced this week. So again, we just keep an eye on this to see when larger market participants or market players start changing their position. We can also follow that and start changing our position within the overall market structure and sentiment. Heading on to the SPXP, this is our speedboat. You'll notice that these are 0 DTE as well as weekly expiries of the all expiry. These contracts obviously change over much more rapidly. Takeaway here is we are call dominated above and below spot price, again, as denoted by the green net delta here. Nothing really significant to change on the structure and sentiment. Noting that we have significant charm overhead. These are out of the money calls, which is great for price appreciation and out of the money speculation, but they also exert their force as time passes, which can cause a headwind to the upside unless we see this overwhelmed by new out of the money call speculation. So obviously, quick takeaway here is that our COI and PGEX is at 6,000. That would be that upside target that we'd be looking for, but it may be difficult to overcome that large hurdle to the upside unless we see a significant amount of new call speculation come in above the 6,000 level. To the downside, we have a confluence or our GEX and DEX transition, and then the PGEX sitting there at 58.75 will be a large level that we're not anticipating to get below unless we see a large change in the overall structure and positioning below spot price. These in the money calls would have to get closed pretty rapidly, and we have to look for a large out of the money put speculation to the downside for us to start getting any concern of dropping below 58.75 or moving down towards the 5800 level. So we'll continue to watch that, and noting that the JPM June short call strike is there at 58.05, so you can check that out in our JPM hedge channel for the overall positioning there. Moving on to the SPX P0DT expiry. Obviously, this is what we want to watch for our intraday positioning. Call dominated above and below spot price, not much change there. We do note that the net GEX is slightly positive, again, within the noise floor, so this could go either way today. We do give the slight edge to the call side, which would be the bullish side, but again, just understanding that this might as well be zero heading into the day. Transition areas, DEX and GEX transition confluence, we like to see that. That gives us more certainty if we do get above these areas that we could have price appreciation, or stay below those areas that price could be capped for the upside movement. Drunken sailor range, pretty narrow here, 59.15 to the upside, 59.60. Again, it looks like we're going to open below these areas. So as we always preach here at GammaEdge, if we open below these areas, we give a slight edge to weakness of the overall market unless we take back those very rapidly within the morning. So what we'll be watching for is price to come up towards these levels and see if we get some sort of rejection or stalling, an opportunity to short for a move back down towards 58.75. That index level that we'll be watching, again, talked about, will be extremely difficult to drop below that level. If we do take back the drunken sailor range in the transition area, we'll look for price appreciation above those areas up towards the 6,000 level. If we're within this overall drunken sailor range and the transition areas, we will anticipate that it'd be extremely choppy and probably a no trade zone, at least for me, heading into the day, unless we see some risk reward trade where we get above the drunken sailor and transition area, or we stay below the drunken sailor and have an opportunity to short for a move back down towards 58.75. All right, moving on to the SPXP delta balance. Obviously, this is just looking at the overall market positioning via each plane. The right-hand plane staying around zero, but above zero, just chopping around. So just indicating that right-hand plane out of the money call speculation waning a little bit. Left-hand plane staying pat and firm in the money calls below us. Delta balance staying at 1. So indicating that out of the money call speculation and bulls are still in control unless we see a significant drop. And the projected on out via expiries, again, maintaining above zero, so that's constructive. Moving on to the the SPY delta balance, we do see slight more weakness here within the overall SPY. Again, delta balance and right-hand plane dropping below zero, so this gives a little bit more caution for our positioning, so we'll continue to watch this day over day to see if this changes. The Qs, again, delta balance dropping below zero, so again, a little bit more cautionary. Right-hand plane, we've talked about that. Out of the money call speculation waning, now the left-hand plane is dropping also. So again, caution on the Qs, and just overall positioning. We're within a transition type point within the overall market environment, as well as consolidation. SPXP net stack command, this gives us our highest sensitivity strikes heading into the day. We discussed 58.75 being the index levels, 58.85, those are in the money calls. We anticipate those will be supportive. To the upside, in the money puts, 59.20. That's a confluence with the drunken sailor range, and just below that transition areas, the DEX and GEX we talked about. So again, key strike 59.40 has been discussed extensively in the SPX game plan. That strike there of the out of the money calls, so you can review that. And then net, gamma, and charm, and Vanna, this high sensitivity strike. So it looks like we'll be most likely boxed in between this 58.75, 58.80, as well as to the upside 59.20 and 59.40. Could be extreme chop zone heading into today. So shorter time frame and smaller position sizes would be the game plan within that overall area. All right, trading view overlay. Again, we've talked about the 58.85, 58.75 area. That would most likely be supportive, and we'll look for price to stall around that area and then possibly move back to the upside. If we get below that, we'd be slightly more cautious and cautionary for a move to the downside. Within this overall chop range, that's 58.85, drunken sailor range, and transition. This again could be extreme chop area. You could play these with very short-term moves. Obviously, you'd want to be looking for an overall kind of TA setup, VWAP setup for an opportunity at least to move back to the upside. And the vol-m command will be very vital today for looking at the call and put centroids for intraday market participants, how they're positioning. Obviously, if we have positive slopes, we'll give a little bit more edge to the bulls, negative slopes, a little bit more edge to the bears. And then we'll keep an eye on the market trend model to see if market participants are buying versus selling. All right, hopefully that helps everybody. Sorry about the mic problem early on. Everybody make it a great day, and we'll see you in the Discord in a few minutes. Thanks.